Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, and I am the Chief Market Strategist here at VerifiedInvesting.com. All right, so a couple things. Yesterday, we saw a sell-off in the equity markets. This was when escalations in the Middle East even went a notch higher. Iran firing missiles at Israel, and the market's getting a little skittish because this could mean a wider conflict incorporating more and more countries in the Middle East. We did see oil rally, but only 3.5%. It is up today, but interestingly enough, not taking out the key resistance level. Today, markets are looking a little bit lower. Let's get right into it. Follow me over here. I want to talk about the jobs data as well that we got. So we can see here very clearly, right? If we look at the SPY pre-market, what we're looking at is a market here that closed basically right around here yesterday. So right here, and we're trading down just a little bit. So you can see just a very small downside move today, as really what we're doing is we're looking to see, is there further escalation in the Middle East? Could this envelop more issues and create bigger problems for the global and domestic economy? All right, so again, relatively quiet here on the S&P 500. Now, we did get some economic news out this morning. The ADP private sector, so we have our ADP private sector numbers. They came in at 143,000 jobs added. Now, again, that's not a huge number, but it's not a horrible number. The key was expectations were 124. Right? So 124 was expectations. So this was a better number than expected. And again, that shows that the labor market is holding together. Now, yesterday, and this came out after the game plan, but yesterday we got the JOLTS data. I talked about that in yesterday's game plan, saying watch for that JOLTS data. So yesterday, the JOLTS data came in at 8.04 million jobs. So that's, again, job openings. So how many jobs are being offered out there by people or by businesses? Expectations were for 7.64 million. So again, a better number than expected. We're seeing the labor data, at least these first two numbers before the non-farm payrolls number on Friday. These are better numbers. Now, what is this? Is this a positive? Is this a negative? Well, it's kind of a mixed bag. And I'm going to tell you why. So the market was really praying for a 50 basis point rate cut in November. With this data, it's off the table. Now, at least this data is showing that the economy's not falling off a cliff right now. So again, that's the positive, is that the economy's staying strong. But what we do know about equity markets and investors is they are addicted to cheap money. And they want lower rates. They want lower rates. And again, with this data, you're not going to get that here. So most likely right now, we're going to see a 25 basis point cut in November, right after the elections. And then the question is, does the data weaken by the December meeting to enable them to cut 50 basis points? Now, one thing to take a look at here is if you go to our website, we have the Fed Watch tool, right? So if we go back here, this is very interesting. So what we're looking at in terms of the Fed Watch tool is that we see that, again, just like we've discussed, the odds of a 25 basis point rate cut for November, the meeting's on November 7th. It shows it right here on the website. That, again, is 25 basis points. Probabilities are 62.3%. Now, what's interesting is that the market is still pricing in a 50 basis point. Notice how it skips another 25 here and goes right here. Another 50 basis point rate cut in the December meeting, December 18th, just before Christmas and New Year's. So again, folks, this is going to be very, very interesting because, again, if the economy, if let's say we see a good non-farm payrolls number on Friday, does that now reduce that chance of a 50 basis point, or is the Fed just wanting to cut rates? Is the Fed seeing something that none of us are seeing, that the economy is weakening in the underbelly? We're just not seeing it in some of this data yet. These are all question marks that we'll have to figure out and continue to monitor. All right. Couple things today, guys. We do have some big movers in the market. The big mover today, Nike. Nike, again, guys, take a look at this. Look at this drop on Nike. So Nike yesterday, interestingly enough, reported earnings. The stock initially spiked right up here. So we saw a pretty impressive spike to the upside. all the way up to about the $93 level. It then tanked to 81 and has kind of trailed off. But essentially what they did was Nike removed all future guidance, kind of said, hey, listen, we don't know if this guidance that we had out before is going to be legit. Part of this is the new CEO coming in, wanting to get a grasp on everything, right? And so you have to give it a little bit of leniency. So yes, Nike is down. The question is, are there tradable levels? Well, let's go find out. We're trading at around $82 per share. What is a trade level here? So if we go back to the charts and we look at this, what do we see? Well, there is a gap fill at 81 on Nike. Now, again, we've kind of kissed that level yesterday after hours, so just be a little careful there, but that is a technical level, and if we flush through that, your next big support is going to be around 77.65. So those would be your two tradable levels today on the Nike chart. Now, if we go to another big name, take a look at Humana here, guys. Humana, this is issues where basically they're going to have trouble with Medicare, Medicaid type stuff, which again is reimbursements, what's covered, all of that stuff. This stock getting crushed today on this news, and it drops basically almost 25% from yesterday's close to today's pre-market low. It has bounced back a little bit, but I want to show you this. Look at the low today, right below 210. If we go to the chart on Humana here and we zoom out, and I got to go out a long way here, guys, a long, long way. Look at this. Look at this level right at the 210 pierce that it hit in the pre-market right here. All right, huge technical support right there. It's actually the COVID low was about 208, and that I think we went to about 207 on Humana in the pre-market. So amazing. Now that was technical support. We did see a bounce here, so we have to be aware that that level's already seen its bounce. If we do move lower, the next level is going to be just below 200, the even number. And again, right below 200 down to about 190. There's a lot of technical support there as well. But that's a big drop, guys. That is a big time drop on the Humana chart here. Again, this is a healthcare stock. It usually doesn't fall 20 or 25%, and that's what we're seeing today. All right, so let's go into a couple others. The next thing we have to look at is the China stocks. China stocks are ripping, right? So we're seeing these Chinese stocks, which again, they kind of pulled back a little bit on Monday after gapping up. Yesterday, they rallied right back to their highs from Monday, and today they're ripping up 5 to 10% again. Incredible. Incredible. And again, if I only had my magic 8-ball that would have said, hey, because I was long Alibaba, IQ, Baidu, all of these plays, even FXI calls, as you guys saw when I showed my actual position on the screen. But imagine, man. So I took profits on all of them, upwards of 20% on the call options, like 30+%. But holy cow, like these are major moves. All right, so what are we looking at here, guys? So if we look at the KWeb chart and we go to the pre-market data on the chart, we can see that KWeb, again, which is the internet, the ETF that tracks the Chinese internet stocks, we can see that it's up massively again. After closing yesterday around 36, we're at 38.50 right now. Now, again, the question is, are we getting into major resistance points on the chart? And if we zoom out, we do see that we are coming into another area of resistance on these charts around 39. Now, the biggest thing here is it's not, like if you zoom out on this, KWeb is still really low on the chart, right? But the thing is, you have to look at velocity. Velocity is how fast has it gone up. And we're now talking about trading on this KWeb. And again, this is an ETF, right, that tracks these internet stocks. Just in 2 weeks, you're talking about a move of over 50%. Over 50% on the KWeb in 2 weeks. Now, for me as a trader, right, as a trader, I look at this and I say, wow, this is a great opportunity to short, and I did short again this morning some KWeb, getting involved in this on the downside, because more than anything, as much as I like China longer, mid to long term, I think it just is due for a pullback. Now, the Hang Seng market was open. I think the Shanghai was closed for the remainder of the week, but the Hang Seng was up about 6%, which is why you're getting this big move. All right, so what I want to do now is I want to show you guys just a couple things that are so cool here. So if we take a look at our 10-minute chart here on this, and I want to bring up a signal here, so bear with me as I do that. So this is the LuxAlgo signal, and I just want to show you guys this. Take a look at this. This came out yesterday on PDD, and bear with me here as we move it back. Bear with me. Let me refresh the chart here. So look at this right here. So this is the LuxAlgo signal, $25. $25, guys. And look at this. It told us to short LuxAlgo, short PDD right here. Target 1 achieved, target 2 achieved, and it was a perfect trade. Amazing trade. By the way, if we go to Bitcoin and we go to the intraday on Bitcoin, just to show you guys, look at how many signals are coming out here on Bitcoin. Incredible stuff. So this was a buy alert on Bitcoin right here. Target 1 achieved, target 2 achieved right there. Beautiful little trade right there. And then right here is a great example where this was the buy signal here. Target 1 achieved. Target 2 never got achieved, but look, it told you to stop out right there, and basically you still netted a profit on the trade, as again, you took profits number 1 and then stopped out just slightly in the negative on the second half of the trade, right? So again, just a reminder here, if we go back to the Verified Investing website, guys, I always like to show this, is that if you want to get involved in this, it's right here. Right there, that drop down right there, LuxAlgo reversal signal indicator, it goes right on your charts of TradingView if you're a TradingView user, and boom, these things literally will pop up throughout the day, especially when you get great volatility like we saw yesterday. The trades will come in massive amounts. And again, what's cool is it works on the daily chart, the weekly, the monthly, the 1 minute, the 5 minute, the 10 minute, the 15, the hourly chart. Or you can also just say, hey, listen, I'm going to focus my attention on this one area. And again, some people are swing traders, only have it on your daily chart. Fine. Or day traders, do it on your day trading. All right, let's take a quick 30-second break to thank LuxAlgo for helping me create this, going through all the steps, and here it is.
Have you considered enhancing your trading experience? We have an amazing tool for you. LuxAlgo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. LuxAlgo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with LuxAlgo. Please visit the description below and sign up for LuxAlgo today.
All right, here we are, guys. Back we go into the action. Let's walk right over and take a look at the Bitcoin chart. All right, so Bitcoin, wow, what a sell-off the last couple days, but look at where it came back to. If you've been following the game plan, you know that this pivot, this is the bullish, bearish pivot line. When we confirm above, then this is going to be major support. Here we didn't confirm above. Look at how easily it got back below. Here we got above. We even got above the 200 moving average. I took it off because it complicates the chart too much. But again, we got above the 200. We never confirmed. What does that mean? And I talked about this yesterday. I taught it yesterday. It means that when you come back down to the 200 moving average, if it's not confirmed, it's very easy for it to get below. It flushed right below the 200, was somewhere in there. Boom, right down. Now, where did it go? Right to that level. Now, this is a technically confirmed level. All right, here was your close above. Here was your confirming candle. Therefore, this is major technical support. Now, again, based on major technical support, do you expect a bounce or do you expect it to break through? The answer is a bounce. Well, overnight, it already bounced back close to 62,000. But the key is, again, is that you trust levels or you go with probabilities until proven otherwise. So in the short term, you would still have a small positive bias on Bitcoin for a bounce here. But if it closes below, right, this is the kicker. If by chance you get a candle down here, right, and it closes below and then confirms, game over. All right, now I don't mean game over like it's going to zero. I just mean it's going to the next support. It confirms below, probabilities start favoring a move to the downside. That simple. All right, it's a very simple thing. Once you learn confirmation, it's a game changer, again, taught in the Winning Trader series. And again, I created it years and years ago, and it is something I use on a daily basis to find out if it's a true breakout or breakdown or if it's a fake out. I always say this, guys. I reveal a lot of these secrets. I've traded in the hedge fund world and so on and so forth. And there's lots of algorithms that try to figure out every little nuance to make retail do the wrong thing at the wrong time. They're going to push you to extremes this way, push you to extremes this way. They're going to make it look like it's a breakout only to reverse it. They're going to make it look like a breakdown only to reverse it. You have to learn these, and the confirmation signal is a game changer when you learn it. By the way, confirmation signal isn't foolproof, meaning it doesn't always be correct, but it puts your probabilities highly in the favor or the side so you can be right a majority of the time. So Bitcoin, watch this level right here, guys, right just above 60,000. That is a major technical level. Now, if we look at oil here, we got to go through oil because needless to say, this is a big deal, right? We see escalation in the Middle East. Now, if this was 20 years ago, oil would be up $30 a barrel. Here, what are we up? I don't know, about $4, $6 a barrel, maybe about 7%, 8% off of the recent lows. In addition, look at how the trend line of resistance, which, by the way, closed below, confirmed. Therefore, major resistance rejected. Major resistance, we'll see again how it acts here. But right now, you're still back to your major resistance trend line. Path of least resistance is actually down. Now, it's a little tricky. Like if you short oil here, yes, path of least resistance is down, but if things really got crazy, you might wake up one morning to oil at $78 a barrel. That's always a possibility, although somewhat unlikely. So just be aware that, again, sometimes you have to take into account, the risks, right? Every trade, a risk reward. And this is the key, guys. Notice what I do. One of the headlines on the thumbnail today was about trading with no emotion. All right, you can't have emotion. When things like this globally happen, yes, we all feel bad for individuals affected, and it's horrific. But as a trader, you have to somehow separate that out. And it's so hard to do. And this comes in with political stuff, too. I mean, people get so riled up over political stuff. For me, it's very matter of fact. It's like I'm not neither Republican or Democrat. I'm just like, this is what it is. This is the data. This is what it says we should do. This is what it is. And maybe that's what we need in politics more, is like follow the data, right? But essentially, you have to get to that level as a trader if you're going to be successful. And by the way, same thing for investing. Don't think David Tepper and think about him. And I talked about this a month ago. I said he's loading the boat on China stocks. While everyone else, when you look at the comments when I'm talking about bullishness on China, the comments on YouTube, they're like, oh my God, you can't. That's crazy. He's crazy. He's stupid to be investing in China. I'm just following the data, folks. And the data doesn't mean that I'm always right. It just means that a majority of the time it will be right. And that's all I care about. I know I'm not going to be right every time. There's always going to be a bad trade. It's okay. Because as long as I'm winning 7 or 8 times out of every 10, and I do that a million times over, the money takes care of itself. So again, get rid of emotion. I know it's hard. Look at the data. The data right now is that's resistance right there. Let's see what happens in the coming days. Now, how would that change? If we close above, right? Okay, well, that could be a fake out. So you don't want to there'll be a lot of people when they see that, they'll be like, oh, it's breaking out, go long, buy calls, whatever. Okay, that's their thing. That's emotion. Wait for confirmation, and then you know for sure. Well, not for sure, but at least 80% probability, somewhere in that vicinity. Okay, next up, let's keep going right through here. Let's take a look at gold today. We'll just quickly go through gold and see what gold is up to. Gold today is trading basically down a little bit. And again, you can see it's right bubbled up right against this resistance line right here. This is my major resistance. Now, by the way, another great example of emotion. So over the last, let's say, week or two, there's been so much hype in the media on gold, so much craziness out there. And for me, while everyone else is so bullish, I'm sitting back and I'm saying, well, yeah, but I understand people are bullish and I love gold long term, but you're into this trend line from 1980. I mean, that's a what is that, a 44-year trend line? You got to respect it. And listen, it doesn't mean it can't break, right? It doesn't mean it can't break. It could, but probabilities say it shouldn't. And therefore, for me, when I shut off emotion, and yeah, do I see the crazy U.S. debt? Yes. Do I see the crazy Fed starting to drop rates? Yes. Do I see the global instability? Yes. All of those are reasons why gold should go higher, and I believe it will over the longer term, but in a short-term manner, it should pull back. Now again, should isn't a guarantee, but it should, meaning probability is 70-80%, and that's what we're seeing here. We're seeing on the daily chart, if you go back to the chart here, you can see it's certainly stalling right around that level. Now the question is, does it pull back to 2,500 like I'm thinking? All right, let's look at silver real quick here, guys. If we go to silver, The silver chart. Let me bring up my other chart here on silver. This is the one I have more annotations on. Now it's basically the same, but basically what we have here, guys, is this downsloping area here. We're trading up in this upper range. And again, it looks like silver's actually inching up just a little bit here. I'm still favoring a pullback to about $30 on silver, but honestly, the jobs data is telling us right now that the economy is doing okay. It is what it is. Now, here we have a chart of natural gas, guys. I did just add this morning to my natural gas short. Now, why? Well, number one, it's getting closer and closer to double top. So, yes, it's above this level. We'll see if it confirms. So far, it's unconfirmed, which means it could be a fake out. But if it closes above, it confirms, which means probability tells us it's going to this level right here. All right, now there'll be people that'll say, oh, you're crazy to short, you're crazy. I'm just following the data, folks. That's all I'm doing, inching into a position. So first level right in here, coming up here, added a little bit, and I'll add again right up in this range. Extended move into resistance, looking for that pullback, getting my dollar cost average as good as possible. All right, so when all is said and done, just flipping back to the spiders, we can see the S&P. When I talk about the spiders, by the way, folks, that's the S&P tracking ETF. It gives us the pre-market ups and downs here in volume. But either way, we're seeing a small pullback on the chart here going into the open. So it looks like markets will open neutral to lower. I think, again, everything is going to be all about that geopolitical stuff going on, right? If things start to escalate midday, you're going to see the markets tank again, especially if it gets a lot worse. On the other side, if things calm down, maybe the markets do rally back, but that jobs data, Friday's non-farm payrolls, right? ADP today was decent. JOLTS data yesterday was decent. Will the non-farm payrolls confirm that the labor market is stabilizing here? And that's my cue probably to get the heck off. All right, guys, have a great rest of your day. Thank you so much for coming out and supporting us here at Verified Investing. I'll see you tomorrow. Take care.